E from MarketWizards.com and eMiniWizard.com, about 10:40 on Monday, the 25th of November, 2019. Reminding traders to use risk capital you can afford to lose. All right, this is a look at the current range. I'm going to suggest that we are in this range here, and if you want to short, up to you. Must have capital you're willing to risk. We had the targets before at this 32, 31.75 based on the strength of the NASDAQ today and RTY. It seems that shorting is a fool's game. Nevertheless, if that's something you want to try, obviously use a couple of point stop, and probably at this point, this 32, 31.75 target that we've talked about before, resistance till broken, and the goal probably of the boys is take out the high. Forward done. Targets have all been achieved by 31.25 and 30.5. Anything above that's good fortune. And best I can suggest is, in terms of trade, best longs obviously are done. 24.75 as your stop if you're trailing. And by way of review, we use a number of ideas. You don't need to use every single one of these. But the more that are in harmony, then obviously the better your odds. And we use all of these as part of our ideas. And throughout this session, I've tried to show how we use these things. And you can apply these to any vehicle you want, whether it's an ETF or stocks or whatever. Find the tempo, find the rhythm. So the predictive charts, that's the Murray math. It's all based on calculations, and put it into a formula. Those of you who have been in the Eagle program, you have those spreadsheets, and you can easily calculate where the range should end, should have the extremes and the logical ranges. We use the exponential moving averages to find the chart in play. We use sequence trading, which we've tried to show you step by step what the next target is. Today we had that next target, we said at probably 25 to 26. And then the next target would be at 32s. Secret code, we have not done a lot with. One of these days I'm going to run a program on that, but it ties in with Murray math. It's kind of like hidden pivots in the market, like that 1562.5 pivot I just suggested was key support in RTY. That's all part of the market structure. Your balance of power, which we've given those of you in the Eagles, we've actually given you that tool where it will compute it for you and tell you where the magnets are. Our targets that we use, like today, to show this 31, 30.5 target. We do use Fibonacci. I use a spreadsheet for that. A lot of people just put it on their charts, but I use a spreadsheet for Fibonacci. You can only have so much stuff on your charts. The pivots, support, and resistance, I still calculate those. I find sometimes they're very helpful, other times not much. Kind of an old school thing, but I still use it. I love the 1% rule, average true range. So at this level, 1% rule gets you around 30 to 31 points. And I'm always looking for that idea. Angels and demons, one of the best tools in our tool chest. I want to know where they are. I want to know when we've got one that says, okay, that's now resistance. The Darvas box theory, I definitely use the 3-box system, as you've seen over and over. Tunnel through time, that's the chart I've got in my left-hand corner up here. Shows you the extended levels that I think are barriers. And then, of course, the squeeze pivots, or until that breaks, that's support. So on a chart like this, we had said on Friday, okay, 98, that's support. So that's our squeeze pivot. And then you come up here and you look and you're saying, where's my next squeeze pivot? I use this tail right in here. And then the next one back here at the end of the day could not break down at 5.5. Remember, I said, I don't think you're going to get below 5.5 or 6 if you're short. At the end of the day, I'd said that on Friday, and then boom, just pops right back up into the close and then gap up, and here's the holiday week. So those are some of the things we tried to review in this session. We will be here throughout the week as time permits. Most traders are going to take some time off. I'll poke my head in the Slack room here and there, and we'll do the bonus time as I usually do. And some of you have really, communicated with me and passed on questions and, really been attentive. A lot of you have taken the time to make posts and observations. I thank you for that. And you get out of life what you put into it, I believe. So I'm using this as kind of a tying up a lot of loose ends and saying these are the things I tried to share and show while we're here. Here's our tunnel through time. And the next session will start a week from today. We are in avoid trouble mode. Anybody that's played longside got to that 28 to 32 range we talked about. This is an outlier today, I would assume, up here. Doesn't mean it can't be done. Note I've tried to calibrate these so they will give me a range that I think is reasonable. These are equidistant bands. So from the blue line to the yellow line and the blue line to the yellow line, a little bit different than Bollinger Bands, but I like them. And you'll see when you get from one extreme, you will tend to go to the other. Might take a couple of days, but that's usually what you'll see. Once you get above the blue line and stay above it, then that becomes the target zone.